Bitcoin's evolution from a niche digital experiment to a global financial force continues to accelerate. And now, one of Wall Street's most established names may be preparing to push it even further into the mainstream. According to multiple reports, Morgan Stanley, which manages an estimated $6 trillion in client assets, is planning to expand cryptocurrency access to all eligible clients, including those on its E-Trade retail trading platform. This shift represents far more than just a new product offering. It signals a structural change in how major financial institutions view digital assets, from speculative instruments to legitimate components of diversified portfolios. For years, Morgan Stanley has limited crypto access to its ultra-wealthy clients, requiring high net worth and risk tolerance. But a gradual loosening of those restrictions suggests that the line between traditional finance and digital finance is quickly fading. As of October 2025, Bitcoin has been holding strong around $122,000 to $126,000 if Morgan Stanley opens crypto investing to its entire client network. Even a modest shift in allocations could have far-reaching effects. Analysts estimate that if clients direct between 0.5% and 3% of their portfolios into digital assets, it could represent $30 billion to $180 billion in new inflows. Given Bitcoin's relatively low circulating supply on exchanges, and the fact that large portions of it remain in long-term storage, such inflows could have a disproportionate impact on price. Under a moderate scenario, Bitcoin could rise 20% to 40%, lifting it toward $150,000 to $170,000. In a more aggressive case, as institutional participation widens, Bitcoin could climb 50% to 100% or more, potentially reaching the $200,000 to $240,000 range in the months ahead. Extreme scenarios where multiple major banks follow Morgan Stanley's lead could even see Bitcoin testing $300,000 and beyond. Though those projections depend on consistent inflows, favorable regulations, and a stable macroeconomic backdrop, Ethereum, the world's second-largest cryptocurrency, could also benefit substantially. Now trading around $4,300, Ethereum has established itself as the foundation of decentralized finance and tokenized assets. Should institutional capital flow into ETH-linked ETFs and staking products, prices could advance toward $8,000 or $9,000 in a high-demand environment. The same dynamic could spill over to major Layer 1 altcoins such as Solana, Avalanche, and Flare Network, and Chainlink, all of which have been gaining traction among institutional traders for their infrastructure and utility. Solana, for instance, has hovered near $150, but strong inflows could push it to $300, $400 or higher, depending on how much institutional capital filters down from Bitcoin and Ethereum. Still, it's important to keep perspective. Markets are cyclical, and periods of rapid growth often invite corrections. Regulatory changes, profit-taking, and global events, such as shifts in monetary policy, elections, or economic slowdowns, can easily alter investor sentiment. Additionally, as prices reach new highs, volatility tends to increase, and risk management becomes even more critical. The broader lesson here isn't about predicting prices, it's about observing a transformation. Crypto is steadily moving from the periphery to the core of finance. What began as an experimental digital currency in 2009 has evolved into an asset class now recognized by the largest financial institutions on Earth. If Morgan Stanley's approach succeeds, it could spark a domino effect across Wall Street, with other banks expanding similar access to their clients in 2026 and beyond. For now, Bitcoin's consolidation above $120,000 signals both strength and maturity. It is no longer just a speculative trade, it is becoming a part of the global investment conversation. And as more traditional money enters the space, the narrative around crypto continues to evolve, from risk to recognition. Again, this discussion is purely educational. None of the numbers, price levels, or scenarios mentioned here should be considered predictions or investment advice. Always perform your own due diligence, consult licensed professionals, and remember that the cryptocurrency market remains volatile and unpredictable. Crypto's story isn't over. It's just entering a new chapter.